Safely meeting with family if you're meeting with family, and if not, I hope you are going to enjoy a great break. Not that we haven't been having kind of a break, given that there has been no offices to go to or cities to visit. But we are here at the end of our third week of our cash flow crash course. We have got one more week to go, and this is going to be a super awesome session. As always, on Fridays, we have got two parts. First of all, the module, which is this module 9, and then we're going to jump into a Q&A. It's all about smart investments today, and whether or not you happen to have money to invest or not, this is going to be a very, very important call in terms of what's happening and where we're heading with the economy in the coming weeks and months and even years. Module 9, smart investments, how to invest in a downturn. As always, we are doing this in real time. So we are basically at the moment over 1.5 million cases. We're about to hit 100,000 deaths globally. It continues to grow. It's on a straight line growth at the moment, right? Which basically is like that path as you go from exponential to straight line, where it's pretty much the same every day, where it could either go either way. It could keep on going and starting to increase again, or it could start to level out over the next couple of weeks. But we are absolutely kind of like at the zenith of the entire pandemic as it's happening right now. And we're already seeing the breaking points within our economies. While on the one hand, you have things like the stock market going, hooray, we've got all this money coming from the government, and the government keeps on pumping more and more trillions of dollars in the US. That's not the same case all over the world, and actually is not necessarily even a good thing either. And so if you're looking to make some sense on what's happening with the markets, let me first of all just share a couple of different headlines. This one here, first of all, more than 16 million people have filed for unemployment benefits in the last 3 weeks. This is obviously in the US. Compare 16 million to where it was in February, which is 200,000. So obviously a massive, massive difference. This is now over 10% of the workforce. And they're projecting between 15 to 20% of the workforce. This number is most likely much higher than what you're seeing here right now, but that is a huge, huge number of people that currently are unemployed, and many of them permanently now. This article here, I'll drop these articles in a moment as well. This article is from the United Nations, which is what's happening globally. The impact of the coronavirus could cause equivalent of 195 million job losses. And this actually goes through what that means for the world. We're already at 190 million, right? This already happened, and we have only just got started here as well. Remember, the last crisis, went over about 5 years, and on average, when there's a bear market, it takes 3.5 years to recover. So the fact we're only 1 month into this, and we're already seeing these kind of numbers, is giving you a bit of perspective as to what is coming. And again, most of the media aren't really, like you might have noticed, media is actually more interested in good news instead of bad news, because there's so much bad news right now. And they always like to kind of report what's going to capture people's attention. So people are almost getting numb to the bad news at the moment. What's really important is, rather than look at the headlines, look at what it does it mean. And I did mention on one of our more recent calls that when you have the basis of the economy, which is human labor, which is productivity, and that breaks down, then everything above it becomes a domino effect. And it's just a matter of where and when the cracks start actually forming to the point where the thing starts collapsing. You're already seeing that here. These are just phenomenal numbers. This is JP Morgan, who have just recorrected what was a 25% contraction they saw in the economy within a quarter, down now 40%, which is basically more than the entire collapse of the economy during 2008 over 4 years. This is all happening within 1 quarter, and unemployment reaching 20%. These are the numbers that they're actually projecting now. We're going to see as time goes on that even these numbers over time are going to look small based on what's going to happen. This is IMF warning coronavirus will hurt the global economy way worse than 2008 financial crisis. So the United Nations, the world, the WTO, the IMF are all giving out data very different from what the media and the governments are actually sharing, because they're looking at it from a global scale. And this year, coronavirus dropping global trade be worse than the 2008 crisis. This is the World Trade Organization that are predicting a 30% drop in trade. And obviously, what that means is that we are going to see the GDPs of governments of countries go down pretty dramatically as well, because all the finance markets are based on GDP, right? Like fundamentally, everything is an equation where your balance sheet or what your debt is always looked at as a ratio of your revenues. If your revenues are going down 30%, if that's cutting out all your profits and putting you into loss, then suddenly all those loans go into jeopardy. This here just came out this week, 31% cannot pay their rent. Basically, a third of all Americans did not pay their rent. So think about having properties in the property market, and a third of all the people just decide they're not going to pay you anymore. And that's within a month of the crisis starting. And we cannot expect most people to be going back to work in the next month. And within 3 months, there's still going to be a lot of people out of work or not able to go to work. The entire hospitality sector. This is going to get a lot worse before it gets better, obviously. And this one here, coronavirus, is going to create the mother of all house crisis if we don't bail out renters soon, because obviously, if you're not paying the rent, all those assets are sitting there without anything coming through to cover the loans that go against these properties. And what's happened at the moment, which actually makes things a lot worse, is that you've actually got the governments, like in places like America, saying, well, look, we'll forgive anyone, like no tenant can be kicked out of the house for 3 months. We'll basically say to people, don't worry about your mortgages for 3 months. Like, when you say those kind of things, there's still all the middlemen and people in the middle that actually have to figure out what to do with that. And there's already, as a result of that, some major kind of like kickbacks or backlashes that are coming from it. So, for example, this article here, did the Fed just accidentally trigger a housing market crash? By them saying that they basically were going to be supporting the market. And as a result of that, saying, don't worry about paying your mortgages, there's been all these margin calls from the actual mortgage industry, right? So the guys that actually are providing the mortgages, a lot of them have hedged their positions on the fact that, that there might be a downturn in the market. But by the government coming in and basically putting all the stimulus in, which actually then covers the market, it then means that there's been all these margin calls. And so now there's all these mortgage bankers who are actually on the verge of bankruptcy within a month of starting. So again, stimuluses have, whatever you do in a market, it always has two sides to it. Like I was talking about ecology and economy, when you're in a natural environment, anything you do in that natural environment is going to have impacts you may not even be aware of. Economies are very similar, right? They work in such a way that there's an equilibrium to them. And if you actually start kind of like jumping down on one side of the seesaw, there's going to be things happening on the other side as well. And it's so complex that being able to check in on all of it is impossible. But as you've always heard with the medical industry, side effects are often bigger than the effects, right? The damaging side effects are often much, much more damaging than the good that the drug's meant to do you. Same's happening with things like the actual stimulus packages going out there at the moment. It gives people short-term relief, but it ends up creating long-term structural damage, which can't be easily reversed. And then if we actually take all those things I just mentioned and come back to a few of the links that I gave you before, where I said that there are these 3 big waves, we're going to actually run next Friday a bigger session, which is for the public, which is going to be all about, what are the waves that are going to be coming, and where these 3 waves, which is corporate debt, which is property debt, and which is sovereign debt, which is like government debt, that each of them are so over leveraged already, without even having any issue like the coronavirus crisis, that what's now going to be happening in terms of the unraveling of this leads to huge risks, but also opportunity, as you're going to see as I go through what your strategy should be as you're moving forward right now as well. So there's $19 trillion of corporate debt, all of which gets recycled. It's not like someone just owes money and just pays over 25 years. If you've got a mortgage, you can pay over 20 years, 25 years. Generally, all corporate debt never is longer than 5 years, which effectively is like you going back to the bank after 5 years and saying, I have to renegotiate my mortgage, right? And it's happening on a month-by-month basis that there are rollovers or there are paybacks on corporate debt. And so we have got every single month people having to actually restructure their debt, where it's almost impossible to do if you're an airline or hospitality company today. And the governments aren't providing anything like as much as they need to globally. Some governments are doing it in different ways. But the actual way you go about actually even being able to take on any of that debt relief has a huge amount to do with what kind of business you are. So as an example, our company, Genius Group, we can't get any of that actual debt relief in a place like America, for example. In fact, the only bank we can go to, given that our main bank is in Singapore, is Singapore. Even though we do business in so many other countries, we have branch offices in those countries. It doesn't mean that we actually are able to apply for any of that. And so you're going to find a lot of the international companies, and if they don't have an actual government that's going to support them across everything, which most of them aren't, most of them are just supporting them in their own particular country, then all of these big multinationals are going to have major, major issues, and many of them already are, as we're going to see in a moment as well. And then from there, we then get to where it's all going to start, which is most likely in the retail sector and in the hospitality sector. Department stores' top list of consumer companies most likely to default on debt. This actually just came out April 9th. This was on Thursday, or yesterday. And this actually shows you which are the companies which are going to be defaulting first. And it also shows you what is the percentage probability that within 1 year, there are going to be defaults within the entire industry. And you can see here that you've actually got 42% of, this is 42% of all debt in department stores is expected to be actually in default within 1 year. I mean, that is huge. And then you've got from that hotels, cruise liners, 37%, tires and rubber, leisure facilities, casinos, gaming. All of these are about a third percentage all the way down, and then it continues on to all the retail and restaurants. So massive, like quarter of all restaurants, like restaurant debt is likely being default. So this is not a small thing, right? And it's all going to be hitting in the next year, and it's going to start in the next couple of months, most likely within 3 months. So it's not going to happen maybe this month or next month. You won't hear much about it, but then you see much, much more about it in the coming months from that. This year, downgrades that are taking place at the moment, which is happening at the country level as well, right? So this is where countries themselves, who do not have the same ability as some of the Western countries to just pump out money because they're actually indebted themselves, where they are now seeing some major, major challenges in the way that they're actually going to be having to, in one form or another, be able to refinance or restructure their debt. And there's already countries which is going down to junk bond status. So, for example, South Africa. This is the South African debt has already gone down to junk status here, and so that's the rand for everyone who's in South Africa. Obviously, our resort in South Africa, we do events in South Africa, but basically South Africa is like one of the first in the African countries that will default. And this article here, Africa faces complete economic collapse if coronavirus is not controlled. This is about the whole economic situation of what's happening in Africa. So it'll be South Africa. It'll be Africa and South America, which will be the place we'll see the first default, and then there'll be a domino effect as that then starts hitting some of the European countries as well, who simply aren't able to either repay or restructure the debt they have. And so because of that, we're going to see hyperinflation. We're going to see new currencies being formed. This is all going to happen within the next couple of years. So this is the rand. The rand, the rand has dropped since the beginning of 2020, 20%. Imagine having a property with $1 million and suddenly it's worth $200,000 less. Like, this is basically how much the rand has dropped for the entire country. And that obviously impacts all the companies that we have there. But the same is happening in other currencies around the world as well. This is against the US dollar, right? This is Singapore dollar against US dollar over the last week. We're actually seeing now the dollar starting to drop in value itself. Like, everyone went into the dollar when they were selling all their assets. Now they're getting out of the dollar, right? So we're going to see the dollar continue to collapse through this year. If you've got money in US dollars, or if you've got money in some of the other currencies that have been printing money like crazy, then a large part of what we're going to talk about here is how you actually shift that and move out of it. And as you can see here, this just came out as well. IMF predicts coronavirus will trigger worst economic fallout since the Great Depression. So do you remember at the very beginning of when we started doing these webinars, there were a lot of people who were not really yet that focused at the actual impact that the wave was going to have. I still remember some of the articles that I was actually writing on things like, America was 1 week behind Italy, and Italy at that point had all these horror stories coming out of Italy, and everyone's like, wow, poor old Italy. And I was saying America's like 1 week behind, the UK is 2 weeks behind, and they're all going to get into lockdown. And sure enough, we've seen that all happen. While everyone's thinking of that, and everyone's thinking about the health crisis, which is obviously a major crisis, I'm now saying it's time to start thinking about the next step and what to do about it, because this is the biggest economic crisis that we have faced in not just a generation, but I think in history, right? That's what we're actually going to be stepping into right now as well. So on that cheery news, let's go into what we can actually do about this. Like, what are the actual steps we can take that allow us to actually weather this and actually see it potentially as a reset and an opportunity for how we look into the future as well. So the first thing that I will share is this little quote here from Warren Buffett: "Only when the tide goes out do you discover who's being swimming naked." We have been living in a sea of debt where anyone can just go get money almost for free, and now they're going to pay back. And the governments are going to be in that same situation where, like, the American government's printing money like for free, they're going to have to pay back as well. But this whole story of basically like how we go about paying back, and the actual steps from like where it doesn't happen slowly, it happens very, very quickly, right? It's kind of like, it starts like a tectonic shift, which is very, very slow, and then the earthquake happens, and it happens very, very quick. There's an article here, which I didn't even open up, but I'm actually going to open it here. So I think it's kind of a very interesting article, which is the history of what happened to the German currency before the mark. So this is like the Reichsmark, which actually was around and was getting printed like crazy at the time after the First World War, before the Second World War. And you can just see these crazy pictures of what happened, where it actually was holding its value as it kept on printing. And then basically when suddenly you had this shift in the economy, and you suddenly had all the kids like basically like making kites out of money, and all the money just suddenly was becoming almost worth nothing. And the only thing the government could do at that point was just print more of it. So it just became this massive hyperinflation that was taking place, where they were pretty much changing the pricing every hour. And obviously there's been countries like Zimbabwe where that's happened as well, where you think, well, like, what's the chance of that happening to US dollar? Well, when you triple your balance sheet, within basically a matter of minutes, like over the last couple, this guy's actually got an entire coin outfit on here. But if you actually see how quickly we've been printing money, you've got like just what, for $4 to $5 trillion that's been printed over just the last 2 months as a result of what's been happening here as well. And so we're just seeing this. It's almost like, who cares? Like it's already where we print whatever much. Let's just print as much as we can, right? Like at the end of the day, it's like we'll figure out the issue later. And when you get to that kind of like absolute abandon, that we're kind of close to the end. And so with us actually looking at where we are, and you may be thinking, well, you haven't got on too much debt right now, or you might be in a position where you can actually service your debt, so it's not too much of a worry for you. But you're going to be running, like either investing in companies or involved in companies where this is a major issue. Every pension fund in the world, if you've got a pension right now, do you remember how many pensions actually just evaporated during the 2008 crisis? This is the time to be restructuring your assets. And don't ever think that anything that currently was called safe is safe anymore. In fact, it's the other way around. What was safe is now very risky, and what was risky is actually becoming quite safe. I'm going to explain what I mean by that in a moment. So the first thing is take a long-term approach. Everything I'm saying is not about something that's going to happen in the next 3 months. It's going to happen in the next 3 to 5 years. But if you actually start preparing for it now, then you can actually say, well, what are my plans at the moment? Am I actually trying to grow my business real fast? Am I just making sure I'm sustainable so that I'm actually treading water and I'm actually to see the opportunities in the marketplace? Because there's amazing opportunities that are going to be showing up and ways that you can help save companies. But it's about, first of all, starting by saying, take a long-term approach, which is that you're not going to go and just jump into the stock market because you heard that it went up this week. You're not going to go out and basically just start trying to buy properties because you think the market's at the bottom. But you're just basically biding your time, putting your money in the safe places and making sure you're getting cash on your money. And where cash is king right now, making sure the cash, as you bring the cash through, is the right kind of cash. Because there's right now good cash and there's bad cash. So the second thing, following market principles, is actually knowing the long term is about these market principles. So what are these market principles? There's 8 in total. And those of you who have been listening to me last year or came to any of our investor sessions, you know about these principles because we were talking about them long before the crash. And we're saying, like, start following these principles because of the crash. And you heard like the fact that we've been following this for a year now. And even so, it's still very, very painful when the crash comes. But at the very least, we know that we've got the sustainability through the crash with the decisions that we've actually made, right? So the blue ones are what happens always in an up market. You actually are in for a long-term a ride instead of going for short-term. Short-term is like 3 years or less. Long-term is like, 25 years. Capital ROI, you're hoping that you'll buy the property or go up in value. Don't expect that anymore. Make sure whatever you're getting into is going to give you cash flow no matter what. Leverage, like where you're actually going out and getting big bank loans and so on to actually leverage on a particular property. Don't go do that right now because that property might halve in value. And if that happens and you've over leveraged, then you're going to have to pay back the bank, which is where all the big troubles are going to come from. The big troubles are not going to come from those companies that end up basically cutting their costs, not making much revenues. They're going to come from the companies that have no choice but to close down because they are owing all this money to somebody else, right? So like you might have 2 companies, one which is making 10% profit, one which is making 10% loss. The one that's making 10% loss could end up being the one that survives because while it's 10% loss, they've actually been able to manage their payments and cut down their loans in such a way that they actually can survive. Whereas the one making 10% profit might be the one that fails because while they're making 10% profit, they've got all these borrowings, they've got all these properties and other things they need to maintain. And as a result of all of that, they end up running out of cash because they have margin calls or they've got to pay back the loans that they've got. So it's no longer a matter of who's the healthiest based on your P&L. It's about who's healthiest based on your balance sheet, right? So what does the balance sheet of the companies that you're actually investing in look like? Do they have the sustainability or do they have big costs they have to pay back and deadlines to pay them back on, in which case you're going to be in big trouble. And then the risk, obviously the risk has totally changed now, and the risk is now all about operating risk. Like, are you in a place where as things continue to go worse? I mean, I'm very sure we'll see WeWork most likely go bankrupt or go into a fire sale or have to basically sell a lot of their assets, even though most of their assets aren't even there because they're basically renting the places they've got. They're renegotiating all their leases at the moment, and they're doing all sorts of crazy stuff, which actually is against like humanity. I mean, like the fact that they're forcing their staff to show up at work because they have to try and keep open to try and create some cash flow because they're in these long-term leases. All this crazy stuff that's happening is going to be the reasons that companies like that are actually going to go bust. The red levels, cash ROI is all about making sure you're getting cash on your money right now. Liquidity is making sure that you have the ability to move in and out of those as time goes on. Quantum is making sure there's smaller amounts of money you're putting into things that allow you to spread your risk in different areas. And then non-financial returns is making sure you're learning as you go as well. So as an example, I know I shared with you, I think on the last call of the call before, what we were doing when we were launching our program for our investment round. So this round, we opened just for 2 weeks before we launched. So it's not actually launched yet. It launches in a week's time, like on the 14th of April. But we had a pre-launch where we said, okay, we're going to put $500,000 aside for a pre-launch. And of the 500,000, we're already about 80% subscribed on the 500,000. Like this is all within like 1 week. And this is going to our existing investors and saying to them, look, we've got a way for you to actually make sure that you've got secure investment, 12% return from $10,000 to put that money into the company, which is going to continue to make cash flow. And more importantly, where it actually is going to be housed in Singapore, which is solid. We're not printing money like crazy, where it's hedged against the US dollar. So it's not all sitting in US dollars or in pounds where it can actually drop very quickly. And as a result of that, because it's solid and because it's actually based on a company that has got cash flows that is coming in and has got the plan to go IPO, we are, over the next 3 years, much, much more secure than even having the money sitting in the bank. And that's a strong enough argument for those people who already trust us and already have seen the returns they've got from us to put their extra money with us instead of putting them just sitting in the bank or putting them basically in the stock market. And this actually is a perfect example, in my view, of structuring something in a way that's able to then attract the money which is looking for a safe home right now. And super important, like when we launch this out to everybody, if this is something you want to be a part of and you want to see how it works and so on, great. If you look at the principles of what we're doing and you actually have other things you can put money into where you actually have that same sense of security that comes from that, then go ahead and do that. But the fundamental key to this second point is this all about following the market principles, right? Like the market principles for a down market are very different from an up market. The third element, and by the way, even if you only got $100 or $1,000 you're investing, there are ways for you to invest that money in a way that you're actually being solid, where you're getting cash flow and you're making sure you're getting the returns that are coming through from those returns as well. There's microfinancing that's available right now that you can actually be involved in and know that you're going to get a fixed return coming back. Many different programs like that you can get involved in your own country. And what's really important about this is making sure you don't have the money just sitting in the bank account, because if you have that and then just like we saw, South Africa, it drops by 20%. The pound drops by 20%. You just lost 20% of your money, even though you're trying to keep it safe, right? Like Western currencies that are printing money are not safe anymore. And you're seeing this by massive swings of 20% or more, which is just unheard of from the past. Build credit while you can. This one, I'm not going to spend a lot of time on this one, but it's really important to know that right now it's easier to get credit than it will be in 2 or 3 months' time. I mean, we basically are applying for credit, like just by default in every country where we are. I know what's going to be happening to banks and how much they're going to tighten things down once they say get defaults. So I've gone to I bank with about 6 different banks. So every one of those different banks, I've gone to them and I've applied for the maximum credit card extensions I can get on each one of them. Now you say, but am I going to use those credit cards? No, I'm not going to use them, but I'm going to have them just in case I want to use them. And when you actually are bumping all of them up now because people are willing to give you more money because the banks are in this mode of saying, government's telling us to give more money, we're going to give more money, and they haven't yet had the massive amount of defaults they're going to have, then they're all in this free money zone where just having that facility is really worth having right now and locking it down. And if you have an ability to get a loan at a very low interest rate and secure that now, then being able to either invest in something or have that for a rainy day, go do that now, because your window is only about 6 to 8 weeks maximum before they start locking down on that. And so that's one thing I'd say is, like, even if you aren't sitting a lot of money, there's a way for you to get credit across the board by just going out and basically applying for it, getting it while the banks are giving it away, and then knowing that you're secure. And whether or not you have $100,000 sitting in the bank, or whether or not you have $100,000 in facilities and credit, it's the same thing. You have the ability to accelerate out by 100,000 if you choose to, and you have the same feeling when you're doing. Or let's just take another number, 10,000, right? If you're like, I wish I had $10,000 in the bank right now. Well, if you had a $10,000 facility with the bank, it's the same thing as having $10,000. You can draw 10,000 either way, but the actual sense you have of security and abundance coming from a place of knowing you have it but you're not using it allows you to make the right decisions now. right? That's very different from just going out and blowing it all on something, right? You don't want to do that. But having it and knowing you have the ability always to have it takes the fear away from basically, oh my God, I'm down to my last dollar, right? So this third one is really, really important to basically settle everything down and come from a place of real focus and abundance as you're going forward. This next one, get ready for the sale of the century. Same thing, right? At the moment, what we're doing is we're saying we do not want to be actually raising money in order for us to burn it through the company. So let's make sure the company is operationally secure and structured in how we're going to go forward. But let's raise money right now, because then when the actual sales start up, this will be the time when we are going to be able to buy millions of dollars of value for $1. Right? And that's not because the millions of dollars of value becomes worth $1. It's because the person who owns that property or owns that business owes so much money that either their property or their business, they have to get rid of it as quick as possible to get out of the situation they're in, because they've already basically maxed out and they want to keep their staff and they want to actually have someone take over and keep it running. Or they have had their entire property taken away from them or their business taken away from them. The bank's taken it on, repossessed it, and then now they're basically going out and auctioning it. So one thing about right now is not going out there to buy. One thing right now is to position yourself on the basis that you're going to go shopping. And even if you're there thinking, well, I don't have much money to go shopping, if you start seeing what's happening in the market right now today, you'll be amazed at what's actually possible and what's actually affordable right now as well. So I'm going to give you some examples of this, right? Let me show you, I just opened a number of different sites, some of the ones that I'm on and some other ones which you may not be so relevant to me, but it may be more relevant to you. So this here is a site called Global Hotels for Sale, right? So basically it lists all sorts of awesome hotels that you can buy. And already on here, there are foreclosed properties that are actually starting to show up. There's super cheap properties, which are all like $500,000 to under $1 million, right? Which for a hotel is actually really cheap, right? So you actually got all of these now already starting to show up because people already are starting to post them because they're actually in trouble. So I'm on sites like that, just watching what's happening, not buying, but watching what's happening. Like here, $250,000. You've got the ones that are on request are either too expensive or too low. Here, you've actually got companies that are actual takeover companies that are putting up different properties on here. This one here, this is on businesses for sale. You're already seeing distressed sales of properties showing up here, right? So this one's in Spain, where people actually have no choice but to sell and sell at a big discount based on what they bought it for because they're already in financial difficulty. And when you're coming in and actually buying something where someone's listing it, then you're already in a position where you are helping them out. So while you could think, well, I'm just taking advantage of a poor person's situation, no, they want you to buy it, or else they wouldn't be listing it in the first place. And this is not even talking about the ones you go and approach where you can see they're struggling. This is about the ones that already are out there. We, at the moment, are knowing that the time when we actually recover from all of this and we're listing on the stock market, a large part of our story will be as a result of what happened with the crisis. What were the actions we were able to take during this time as we shifted our model? So for example, this here is this SME Mergers or S Mergers is a really good site for all sorts of different businesses for sale, right? Where basically a lot of them are distressed businesses as well. This one is specifically colleges for sale. So there's all these different colleges around the world, which actually right now have got operations had taken place. They've got the online side, they've got the student side, but where again, the actual company has got real challenges with debt or real challenges at actually keeping things going. And they're all over the world that these actually exist. So watching this kind of thing and seeing what's available, seeing which ones are actually at the best price, starting the conversations up in the coming months with them. This one here, which is all different schools in different places, you can see these ones are all over US, where you've got entire campuses, schools. You can see the kind of pricing that's taking place in these different schools, which actually works very, very well asset-based wise. You could be actually buying something and less than the price of the actual asset, and then you actually get in the business in it as well. And you've been hearing, if you've been following our story of Entrepreneur Resorts, how much that's already something that we've been doing with Entrepreneur Resorts even before the actual challenges took place. And so it goes on, right? There's a site here, which is a site which is actually called Transworld Turnarounds. So this is turnaround businesses, all different businesses that actually you can go look at. And what's amazing about this, like this one here, specialty wine store, seller financing available, it means it doesn't even cost you anything to buy it. Seller financing basically means they'll finance your purchase for you. It's like you take it over, you start running it, they drop the cost and you've now got it. And over time, like you end up through the profits you make paying for the business itself, right? So you end up with a business that can actually, this one's doing $800,000, you can get it for zero, for $1, right? Because there's already people out there that actually already have got other things. And in this case, they're saying, well, career change, so on. It's not even just because of the crisis, and because they're actually just wanting to get out of it and it's costing them money because they're not there to run it. And so it's actually costing them a huge amount. to keep it going while they're trying to get into something new. So vendor financing is a really, really powerful way of you starting something and getting it for free or for very, very little cost. And I'll give you all these links as we go through this as well. And it goes on. Like, look at this one here. 1,195 liquidations, 167 administrations, 282 wind-up petitions. This is the UK. So you actually just join this and you get pretty much the entire front row seat of all the companies that are so distressed that they're actually just looking for a buyer, that you can then come and actually see, well, what's available. And the fastest way to $1 million business in the next couple of years is not starting from scratch and building $1 million business. It's taking on $1 million business for $1 and then just running it, right? And actually having the support to run it. And I know a lot of the mentoring that I'm going to be doing is going to be helping and supporting those that are looking to sell a company to those who are going to buy it, or those who have just bought a company, and actually being able to then really build the operational expertise in it as well. And if you're in property, all of the top ones, Home Finder, Zillow, they've now actually got an entire section. I just did one quick search on San Francisco. 428 foreclosures are on Home Finder right now versus 544 sales. It's almost 1-to-1. And so this is basically all of the ones that are on here at the moment that are on foreclosure, which basically means either the bank is already selling it, or foreclosure means the bank's already taken it over effectively, and is now actually selling it usually at 50% off, because they're basically just trying to get it off their books before they get the avalanche of other ones that are coming their way. This one here is Zillow. So many of you know of Zillow. Zillow is like the biggest one there. They've actually stopped all their purchases themselves, but they have so many foreclosures coming through that they've actually got a whole section, which is their foreclosure center. And if you want to see just how rapid this is, San Francisco, I timed out on this. Okay, here we go. Foreclosures and foreclosed homes for sale. I can go in here. It is, here's all the foreclosures happening right now. But when we're actually in here, the actual number of foreclosures that were showing up hour by hour was basically about 5 to 10 every single hour that were showing up on here as well. But if you actually go have a look at this, you can see 3,408 right now that are actually being listed on there too. And so you can actually see the ones, see the pricing and everything like that as well. So if you're in America, same thing in UK. UK's got Repo List, which actually tracks all of the repossessions, refurbs, cash only, and so on. So again, I'm not saying go buy properties right now or go buy businesses right now. I'm saying if you see that your smartest way for you to basically make the most of the downturn and help other people that need your help right now, you're not sitting in lots of debt, but they are, then this is the sale of the century. No question about it. There was already half of this happening in 2008. This is like way, way, way bigger. And the final thing I'll say is stay on the front line, right? So now the way I'm thinking and the way I'm talking about this, don't think for a moment you need to be sitting on millions to be thinking in this way. The people who are going to be sitting on businesses where they're being super successful, where they've saved lots of jobs, where they've helped to build something, are the ones that simply sat here, listened to a call like this, and then said, you know what? Why am I going to build my next $1 million business from scratch when it's already such a struggle? When I could be taking over a business with lots and lots of very willing buyers, people who actually are going to be super keen to actually look after this company once it grows after the downturn, because it already has a strong brand. They've got a team in place already. They've got years of experience. They just happen to have an owner that over leveraged themselves, that couldn't keep the business going, that wanted to be able to get out of it and sell it to somebody. Why don't I go in and help that person? And knowing that you can even do it with vendor financing, which costs you nothing, that's an investment strategy. And it means that you're actually effectively taking on, now many of these deals are going to happen. It's just, are you in the right place for it to see it happen? Which is my final one, number 5, stay on the front line. Be the person that's actually just like I'm doing right now, going out and saying, right, if I'm going to go shopping, if I'm sitting at home and I'm tired of shopping on Amazon, I'm tired of shopping at eBay, I can't go down the high street, I can't go down to the supermarket because that's closed too, right? Like I can't go shopping, so why don't I just shop online? But instead of me shopping for retail value, where I'm just going to go buy something and consume it, let me go shopping for wholesale value, where I'm actually going to, every dollar I put in, I'm going to make 10 or 100 or $1,000 out of that dollar. And even if I've got $100, if I can make $1,000 in any 100, how can I put in $100 to make 100,000? Right? What would be the thing that I could be part of right now, which actually would give me those opportunities to find the right opportunity to work forward with? Who do I know within my network that has got skill sets that I don't have, that might be good at financials, that might be good at deal making, and actually start thinking differently about the future, given that there are all of these opportunities that are coming our way. So I wanted to share that because hopefully this helps and gets you thinking in a different way. I'd love to get whatever your biggest insight is, to just drop that down into the comments as we go as well. I'm kind of doing a quick revisit on here because I know my time is up here. So I want to just make sure that we've got my video going and everyone is rolling. And like I said, I'll drop all of these links in as we go as well. So don't worry about that. And the final slide that I wanted to share was one about this whole thing about thinking differently. This year is something I mentioned, and I thought, you know what, that's a quotable quote. Something I mentioned as I was talking yesterday, to some of the guys that I was mentoring. And it was this thing here, that every global financial crisis has lost us a decade. This is very true. It's always puts us backwards. So because suddenly all that gains that we had, we have to go back, we have to start from scratch. But this is the first one that's going to propel us forwards. I really believe that while, we're talking on this call about how you actually can really make sure that assets that suddenly have a whole different value because debt is going to be unsustainable. Because of that, and people just don't have the holding power anymore, it allows you to come in and actually be the white knight to actually support and help them and get a great deal at the same time. That during this process, as this is all going on, as we're going to go through next week, which is all about the future, it's all about what are those ways, what are the things you can step into. If you really wanted to start something new, what is something you could buy that actually could help you to grow new? Or if you just wanted to go from scratch and do it that way, what are those actual waves that actually you can ride? That all the things that we've been talking about in terms of Society 5.0, in terms of the fourth turning, all of these different elements are all now right in front of us. And actually, because the past has accelerated away from us so quickly, it's actually just given us a clean slate for the future. And as a result of this crisis, we are actually leapfrogging ahead to what's going to come next. And that in a way is very, very powerful, but it doesn't come without a lot of pain. And just knowing that, there's people, I just want to share this as a final thing with you, that there are people all over the world that are really struggling. There is, on my Facebook page, I actually posted this, something that Sandra Morel set up and a lot of our team have been supporting as well. And it is the fact that our school that we support in South Africa, that it actually, all the kids, they actually get their food by going to the school, but the school's closed down now. So we've actually set up, Sandra's put this all together on a GoFundMe campaign. And it's super awesome to see, over 3,000 already has been set up on this, which is all through our community, which is just amazing. But basically, this is for us to actually get that soup kitchen started up in the village because the schools aren't able to do it in the school, and actually just make sure people have something to eat. And I do want to say that to everybody, while you're here, if you actually look at the, food bank issues and that are happening right now with the food banks out there, nothing like anything like it. This is America, right? This is Los Angeles, like a mile queuing to just get food because they have no food. Something like we've never seen anywhere in the world. And this is just in America. This is not even talking about what's happening in India and Africa and in other countries around the world where at the moment there's just no way to earn enough money to even be able to put food on the table. Just in the midst of whatever you're focusing at, whatever you're worrying about at the moment, just take a moment to just be grateful for where we are, what we actually have for ourselves. And while things can be tough, we still get to put some food on the table. We still get to think about a brighter future. And the more we can actually support, help others, the better. And so do give to some charity, do give to some cause that you really believe in over the coming couple of days. If you'd like to come support what we're doing with our kids in Tau in South Africa, please do that as well. But on that note, have a fabulous Easter. Do tune in 20 minutes when we actually start on the next session. Same place where we'll go through the Q&A. Do drop a question if you have one. And outside of that, I want to say, again, super happy Easter. And we'll catch up with you on our Monday session on our Easter Monday. And on that note, I will say goodbye. Drop your biggest learning into the notes, and we will catch up with you very soon. See you later.